Hello, and welcome back to Trading Weekly, another installment of our kind of trading perspectives, etc. How are you doing, Kaye?
I'm doing great. Happy Sunday to everybody.
Happy Sunday indeed. This is Kaye, and obviously I'm Shaun. We're here weekly every 1 p.m. Eastern Time. And you can subscribe to us down there at Trading Weekly on YouTube. Really do appreciate that, of course. Massive thank you to Wolf as well for letting us use the platform. We really appreciate it. We couldn't do this without you and your support, of course. And obviously make sure you put your audience requests in to the hang on, this has changed. This is no, I can't put the audience request on the screen because this thing on the right has changed, which I probably should have checked before the screen. But I'll figure that out halfway through the stream when you'll start talking in a minute. Okay. One last thing. Obviously, this is a disclaimer. Just a couple of guys looking at the charts on the internet. It's not financial advice or like that. We just do it for a bit of fun, give our perspectives, our thoughts on the stocks, and hopefully help you learn a little bit along the way as well. So let's jump into this slideshow. Okay. Actually, before we do that, how was your trading this week?
Well, trading
It's a
was
tough week.
I think it was a very tough week, especially towards the end. Friday was a complete shit show, I would say. The funny part was I wasn't even watching the news. I was busy with some other stuff at work. But when I watched the news and I saw all my trades, they went south. Especially Qualcomm, United Healthcare, everything was like going down the drain.
Yeah, it's a very tricky week for me as well. I mean, I got caught in a bit of chop here and there. Didn't play any, obviously, earnings or anything like that. So that was probably a good thing to do, given the market was already a bit bouncy. So I think this week's going to be a bit more steady, a bit calmer, and just read what's kind of going on. And obviously, it's looking like it might be a little bit more of a red week just because of Friday's price action. It was a bit tough to see, but we'll jump into the charts and discuss that a little bit later on. I found out how to do everything on the screens again because it was in a different section for some reason. So yeah, make sure if you are watching, put your ticket request in the comments. We will get there probably about 20 minutes or so after our normal bits and bobs. So yeah, let's move on to the slideshow then, shall we? Okay.
Yeah, let's do this.
Awesome. Right, so obviously tomorrow is August 4th. Can't believe it's August already. Fantastic.
Wow.
Last week's performance, we can see on the screen here, we do have a few red ones, but we do have Microsoft and Meta kind of pushing up the kind of SPY earlier on in the week, wasn't it? Up 2%, up 4%. They kind of held their values, although they did kind of go up about 7 or 8% each, didn't they? So
I think it was amazing. I think especially for Microsoft, the Azure growth is phenomenal. I mean, they have come so close to knocking AWS off from the number one spot. And that I also see not just from the earnings call in itself, like my friends who work in all these different SaaS companies, they have also seen an uptick in companies using services away from AWS into Azure and even Google Cloud. So those segments are really growing for Microsoft and Google, I would say.
definitely pushing their services forward, and it's obviously working. So that's good for them. We've got a comment here already from Best Trade Designer. A buying week. We'll discuss that a little bit. I think there's a little bit more work to do before we start buying stocks. We're still quite high in the markets, and there's still a lot of elation. But we'll get to that a little bit later on. But just touching on Apple, obviously minus 6% on the week. Amazon down 7.52%. And Tesla actually a modest 2% down. So actually not too bad. Considering the rest of the market doing its business. We've got massive earnings coming up this week, which I'm not too sure that's the next one. No, this is Fear and Greed. We'll get onto earnings in a second. We are bang in the middle, 50 but on neutral, so it could go either way from here. But the momentum is obviously to the downside. Last week we were at 73. The week before that, I think we were 74. So we've kind of been up and around the kind of extreme greed area for a little while now. So maybe it is a bit of time to kind of let go of that. And become a little bit more fearful. Do you want to talk to this slide a little bit more, Kay?
Yeah, absolutely. So put to call, we were, if you remember last week, we were around 0.61. So all of this put to call increased within the last 2 days. So last two trading days, Thursday and Friday. VIX was around the 14 level, and now we are up to 20.38. SPY, as you saw, the one of the biggest pullback for the week was on the Friday itself. So that's why the overall we are down 2.46, QQQ 2.5. So what caused all that is, of course, the job numbers came out, it got revised, they fired the head of the Bureau of Labor Statistics. So what's going to happen next week is basically the market will have to deal with the aftermath of first jobs report and what happened. It's it's really not about the jobs report per se. It's more on the perception that the messenger was fired. Now, whichever aisle you are in, whether you're a Trump supporter, whether you're not a Trump supporter, does not matter. What matters is the optics. So, in the optics standpoint, when you fire, executives or resources who are heading these organization in such a way, um, this will have at least a short-term impact on the market, because now the market's a little bit jittery. Also, a lot of trade deals that were supposed to the tariffs that were supposed to come in on August 1 actually started rolling in. We did not have a lot of taco moments over here, so now I think India got a tariff situation. I believe China is still a 90-day pause on them. I think European Union, we got some kind of a deal going on. Canada, I think the tariffs have resurfaced or restarted. I think Mexico, I think, got a extension. So it's weird because everything is not back on the table. Some have gotten a extension, some have not. And then now we'll have some another initial jobless claims coming in. So we'll see how that plays out. But I wouldn't be surprised if we end up being in the neutral or even pulling towards fear this week.
Yeah, I think with people kind of leaving the office, it could be a sign that anyone could leave the office. Hence like kind of Jerome Powell is being threatened to kind of leave and stuff like that. So we'll be fired, should we say? So
Because
it'd be interesting to see.
just to add on the point, so if you just if you don't think about the politics for a second, so the whole point of the Federal Reserve, whether you agree with their mission or not, doesn't matter. Like, they have two responsibilities. One is to keep the job, unemployment low, and keep the inflation low. So if your economy is doing super great and the job and the unemployment is not rising, why would they cut interest rate? That's just a logical understanding. Whether you like Jerome Powell, whether you don't like, does not matter. This is the point. Now the job unemployment numbers are going to go up. That will only trigger that's the only reason why he's going to cut the rates. Whether it's late or not, we'll get to know later after the fact, but that's where we stand right now.
Yeah, well, only time will tell to see what happens with the jobs numbers, of course, and what happens to the market as well. But we're here for it. We're here for it every week, every Sunday at 1 p.m. Eastern time to talk about it. Let's move on to the next slide then, Kaye. We've got earnings next week, and it's another busy week of earnings. Obviously, we've had all the big names now, so we're kind of dripping down into kind of smaller mid-cap names. Plenty on the screen here. So just starting with Monday, we've got Palantir and HIMS and Hers. Also known as HIMS, so I'll be covering that today in my chart. Tuesday, we've got AMD, Super SMCI as well, Arista. You're covering AMD today, so that's looking forward to seeing that chart. Wednesday, kind of the biggest names I'm seeing here is probably Uber. What have we got? Shopify, obviously a pretty big one. Disney, a big one as well. And DraftKings all the way down the bottom there. It's kind of a fan favorite. It's kind of gone off the boil a little bit, I think. Perhaps other names kind of taking over the interest there on the markets. Thursday, other kind of very well fancied names. Obviously, the Trade Desk, Celsius, Rocket Lab there as well. SoundHound is one of those that's kind of creeping up on people, and Block, which is now ticker symbol XYZ. Anything else that I've kind of missed on this slide here? Oh no, hang on, there's two more that I actually cover myself, and that's on Tuesday. Lucid and Rivian, which I completely missed because they're the two that I kind of cover on my X profile. But yeah, sorry, I'll let you carry on.
No, that's why I was about to kind of bring it up that you missed those two ones.
Yeah.
I think Clover is another one. Is one of those meme ones. I think AppLovin, which is App, right, is also one of the meme stocks that a lot of people are focusing on. Duolingo is another retail favorite these days. You have Eli Lilly coming up on Thursday. Then you have, I think, at the bottom where our faces are covering that, but you have Atlassian, and I think you have Tulio. I think that's what it is at the bottom. Yes, Tulio. Those two, and then the fan favorites on Friday, the Tempest AI.
Yes, Tempest AI. That's definitely one that people are looking at. Maybe less so recently, but it was a Nancy Pelosi.
One more meme stock I forgot. Lemonade on Tuesday before.
Which one's? Where's that? That's here we go. Right in the middle there on the left. You've also got Joby Aviation as well late on Wednesday. That's kind of a bit memey at the moment, but they are actually doing quite good things. So what I've heard, so it's kind of an interesting company, but they're not quite turning the corner in terms of fundamentals just yet, at least from what I'm seeing. So yeah, plenty of earnings once again to kick off the week. It will be a very interesting one. I hold a few stocks myself, so we'll see what happens to my portfolio towards the end of the week. Will be interesting. So last week we picked some stocks, and it was a very eventful week. Rubrik did jump out. It went up like maybe 10-12% in total. Then it obviously gave it all back on Friday. Actually retested the trend line, which is quite nice to see. Did I buy? No, I didn't, just because of the nature of the market. It's tricky to buy that kind of stock in that area. I guess you could probably say that's the best time to do it, but of course I just didn't pull the trigger. So far it was a very volatile week for you, but unfortunately you did lose again, just because you went short and it ended green, albeit marginally.
Yeah.
So yeah, maybe next week we'll get a win under the belt.
That's a pretty wide margin. I think we're going to run out of space. We will have to restart this whole situation again.
Oh no, it's okay. I'll just minimize the font. Yeah, I'll just do that. It's okay. So obviously we've got picks this week. I've got HIMS, which has earnings, and Kaye has AMD, which also has earnings. So it will be kind of a binary win or lose for us this time next week as well, regarding this slide. But yeah, it's just a bit of a fun that we like to bring up every week, of course. Moving on, we've got our first chart of the day. I'll let you speak to this one, Kaye, because I normally start off with the kind of charts and thoughts and feelings with the market. But I want to hand it over to you this week. I want to see what your thoughts are with the chart.
For the SPY, right? Let me also pull up my chart on my side as well. So I mean, that was a pretty interesting drop, especially on Friday, as you see, right? So on Thursday we had, you can call that was a pretty big red day on Thursday, but then we had a gap down. So we created another gap. I measured, but it's only 3.5% from the next gap, right? That's the next gap down that we will see on SPY. Yeah, that's only 3.4%. So I'm hoping we can probably get some sort of a pullback this week. And honestly, as a best trader designer saying we need it, of course we need it, because for us to continue to make higher highs, you need to have some sort of a pullback, rest day. Also, the other thing is going to be is how the economy is generally doing now, because if now tariffs are coming into place, at least for some countries, there will be some impact on the jobs, on the general condition of the public. And if the unemployment rate is rising, then of course the buying power will get impacted as well for the US consumers. So all that is going to play a role, at least in the next quarter, this quarter, August and September. And that will show in the earnings when they report earnings the next time around. So I think it's a healthy pullback. I think probably 3.4%. That should be the one. I would be targeting the one below that if possible. That would be even better for us, for the market to pull back. I don't see how we go back to the April lows or the gap up that we had. That's a pretty big jump. Unless we have a black swan event, I don't see that happening. But the second gap, I think that would be a possibility if we continue to hear some weakness around all the economic data.
Let me give you this scenario though. If we do get a little bit of I don't know, maybe a bit of a retracement, if we fill this gap up higher and then push down to that, could you see that potentially play out? Because
Absolutely.
It could be a little bit of a kind of, I might buy here, let's go buy in. So you get a little bit of FOMO kind of going into that, and then the market just goes, actually no, boom, straight down.
Yeah.
So there is a scenario of that happening as well, but I think you might be right. Obviously, the kind of general feel of the market at the moment, yes, we've kind of run up quite nicely over the last few months. Actually about the last 5 or 6 months, and I think it is time just to take a breather. And obviously, the time of year helps with that as well. August, I mean, you've mentioned it many times. August being a very regularly poor month for portfolios. So a nice retracement down to 600 and kind of see what happens there. And with the market, the way it drops, it drops. So we've got like a bit of drop here, obviously big emotional drop here, and of course down here as well. So it can just take a few days to get down there. And like you said, it's only 3%. So it's very, very possible.
Yeah, I mean, this 3% could happen just in next week itself. Also, from a Max 7 standpoint, the only two companies have really shown good earnings, right? Which is Meta and Microsoft. You saw weakness in Tesla. You saw weakness in Apple. You saw weakness in Amazon.
Exactly. Let me spin you another question.
Yeah.
Would you short the market? Do you short the market at any point ever?
I do spy, um, but that's a very specific strategy, which is a 30 delta in 30 days.
Right.
So it's a very specific credit spread strategy. My win ratio is about 70% on that. So 30% of times I do lose.
Yeah. So there is a thought behind
Correct. Because
this current situation that you might have a look at that or
correct,
not.
correct, correct. So that's a very standard 30 delta 30-day strategy. You don't actually hold the contract for the entire 30 days. Your goal is the change within 2 weeks. So you want to roll your contract, not let it go to the 30 days beyond 2 weeks. So that's a very specific strategy to collect premium. That's pretty much it. It's really not, you're not looking for those big swings or home runs. You are looking to collect small premiums with that strategy.
Yeah.
And that basically for smaller accounts, because you're risking $500 for the credit spread. You're risking $500 to collect, let's say, 45, 50, 65, $75 every 2 weeks. That's the strategy over here. So that's the only time I will short. Apart from that, I don't short.
No. The only time I would short is maybe like a mini swing trade kind of
Yeah,
throughout
yeah,
the week. If I see this week, potentially being a bit red,
yeah,
I'll have a very small portion of the portfolio, just kind of high leverage, and just see what happens with it.
yeah.
With a tight stop loss, of course. Moving on to the next chart, we spent quite a lot of time actually on the SPY chart, so we'll kind of breeze over the QQQ chart. I'm not too sure what happened there. Normally, anyway, you've got the similar sort of gaps there. You've got the one above and then a couple below. If we get obviously a retracement in SPY, that obviously QQQ will follow that because the nature of the market. Down to 540 is kind of, there's a little bit of support. The previous, all-time highs back in the turn of the year in March, etc., and obviously the 50 moving average there as well. But I think the real thing here is probably the gap fill just below that and the volume, because that's a bit more substantial in the way of technical indicators, and that's 532 is what I've got there on the Qs. Anything to add here?
What I'll just add is, if we see a pullback in QQQ around the gap area, make sure you do not miss the opportunity to add to the position, because you will be at 200-day and 300-day SMA for QQQ. So if you invest in the index funds, this is the opportunity you will get.
Exactly right. I like that. All right. So, actually, before we talk about that, we should probably just put in here put your ticket requests in the comments. Obviously, we do get to them in probably about 10 minutes or so now. I think we've had a few come in already, so make sure you keep sticking them in the comments. We'll get to them. And there's a few stocks that are looking a little bit, interesting at this point, aren't they, Kaye? So it'll be interesting to see what people will kind of bring up and maybe give us a few ideas as well for our trading for the week ahead. And of course, give us a nice little subscribe on Trading Weekly on YouTube as well. We do appreciate that. And let's jump into the chart now. This is HIMS. They report earnings tomorrow evening. And this is going to be like a little bit of an earnings play. I'm still not too sure if I'm going to take this, but it'll be a very small portion of my portfolio, of course. Just basically a little bit of a fun one, I'd say. I mean, HIMS as a company are doing really well. I forgot to put the fundamentals on the screen. As always, I kind of do that quite a lot. But generally, they're going to the bottom left, to the top right on pretty much every single chart. Which obviously companies that have those charts it's a good sign for their future growth going forward. Now, I've drawn a very simple trend-based fib extension. I always get that wrong. Where obviously the lows, you come up to the kind of highs and you come back down to the most recent point low. So basically, kind of like waves almost. And this is obviously the lines that have been generated from that. And you can kind of see the price action has played around these lines quite nicely. We do also have a couple of trend lines which I've gone for from the most recent high back in April. I've drawn two just because they're quite similar in the way that they meet at this point. So this is a very interesting point as we sit now at 62. Very simply, want it to come up to 81. Stop loss, it'll start at 52, but if we do get a good move, I'll bring it straight up to kind of break even. Are you going to be looking at HIMS earnings tomorrow at all?
Yeah,
I know you quite like HIMS, don't you?
Yeah, I think I will look at it. The only metric that I would recommend to look into it is their predicted move is around 19%, but their actual move is less than that. It's about 12.7%. plus minus. However, 75% of the times the option markets overestimates the move. This is why that big gap you see. So we always estimate, hey, it's going to move about 19% or so, plus minus. It only moves 12.7%. And then 75% of the times, it basically doesn't move that much either.
Yeah. I'm pretty sure this one will have a little bit of a move behind it regardless. Whether it holds that move or not will be yet to be seen.
That's a different story. Exactly.
Yeah. We've seen that with SoFi in the recent week as well.
We saw with the SoFi, we saw with Qualcomm, we saw with a couple others this week as well.
Yeah, that's the nature of earnings, I'm afraid, people. So it's one of those. It's high risk, high reward if you can get it right, but it's very, very hard to get it right.
Yeah, I mean,
so just be careful if you're out there trading earnings.
The worst part about the earnings play, if especially in the option side, that you could be correct in your thesis, but because of so many factors playing, your time crunch, your move was not as much as expected. All those could still get you. Your trade could be still in a loss. So.
Exactly. All right. So that's HIMS. We'll see if I can get another win under my belt for the overall competition that we're doing. We see your comments there. We've got, hey guys, it's possible to look into EMR and BWXT, two tickers I don't know. And then we've got obviously TEM as well for Anchor. We'll get to those in probably about 5-10 minutes or so. So yeah, hang around for that. And yeah, take a look. Cool. What's your chart then, Kaye?
Okay, so we are sitting at the all-time high, or not all-time high, but all-time pretty high at this point in time for AMD. Couple of things to just note: that post-earning move is about $12.72 plus minus. We do have 27 down revisions. Now, lately, as you notice that from the last earning onwards, we have had this nice little run on AMD. We used to call this advanced money destroyer. So if you follow our program for a long time, you would remember that we would, like, a couple months ago, we were like, okay, it was just like a disaster with AMD. However, keep in mind that there are a couple of things that are going behind the scenes. Is number one, that in the earnings call, they are going to focus on the MI, or whatever it's MI 300 ramp up cost. That's going to be one of the key criterias. And then there's a China curve on MI 300. So, and those MI 300 are the most latest one that are comparable to I think the Blackwell for NVIDIA. I think that's the one that they are comparing against. The good news is that when Meta reported earnings last week, they are building their models and they are building their infrastructure using AMD chips. So that's a lot of tailwind, especially towards AMD. However, we'll have to also see the guidance, the cost, especially with the tariffs coming in, with the China curve going on. It's a very tricky scenario. So we could see a pullback to a different level because 186.20 has been a resistance for a while for the NVIDIA, where it failed to break around the July of 2024. And since then, we have been basically on a downtrend. We are coming very close to that level, and this is where I have drawn those two yellow bars are basically going to be your the actual move of AMD, the $12.72. So again, a very interesting play for the earnings. I don't know how you want to play this one, or if you're going to play this one. This time around, I am probably going to play an iron condor on this one, where I'm expecting the stock to be within that range.
I definitely won't be playing this earnings. It's not my appetite at all. But what I will be looking for, it's interesting. There's 27 down revisions.
Yeah,
that really struck me. I thought that's quite a lot, isn't it?
That's quite a lot because I think there are 31 analysts or 32 analysts that cover AMD, out of which majority have a down revision on the EPS. And the reason why there's a down revision is because of the ramp up cost for building the MI 300 chips. Yeah. So, see, from a Wall Street standpoint, they look quarter over quarter. So if they are seeing that because if you're going to build this new generation of chips that these companies are going to use, your cost is going to go up. So again, you go back to the fundamentals. Your cost of goods increase, which means that you will hit in the profit margin. So short term, there's going to be impact. Long term is still going to be a winner.
It's just whether the market sees it like that or not, isn't it?
Exactly.
Yeah. The only thing I'd like on this chart is it'd be nice to actually draw it, I think, on my own charts a bit later on, is if you drew a line from the low here back in kind of mid-April, all the way through the bottoms, the lows kind of coming up here.
Yes.
Here, it'd be interesting to see if this price actually comes down to that line, which I think is about this line here. Probably looking about 158, 159, something like that.
Correct.
So that would be a level that I would be looking at, and especially with the 27 down revisions, that to me just kind of makes sense if we do get a bit of a pullback on the earnings. Obviously, I'd have to play it into kind of how the market's looking as well at that time. But for me, that's the kind of thing I've just written it down as well for AMD, kind of around 158. I like it to continue going higher because obviously the company seems to be doing okay. Obviously, yes, you said there's higher costs at the moment, but perhaps going forward, 6 months, 9 months, it might be looking a little bit better.
Yeah.
But yeah, we'll see. I mean, RSI is still quite nice. It's setting higher points on the RSI.
But
Obviously, it's quite
especially,
high. But
what I have noticed that during the earnings, it doesn't matter at that point in time. The stock could still rip in the overbought
of course,
territory.
yeah. Awesome. Yeah, sweet. I think that's an interesting pick. I'm glad you brought this one up because it's not one we cover too much on the channel, is it? Because it has been known as the advanced money destroyer, but maybe it's the other way around now.
I think so.
Awesome. All right, let's move on to the next slide, which is what we're doing. What have we got coming up this week, in the future, anything like that for UK?
So I think on my Substack, apart from the trade ideas that I post, I'm also considering to start putting together some investing ideas, which originally my channel was, and then eventually I moved into the trading aspect more. So a couple of good ideas that we called out last year. If you follow the YouTube channel, we called out Uber back in September, August, that Uber would be a trade. Now we are up a good about 50-60% on our trade. Same thing with Snowflake. So I'm thinking of reconsidering on actually doing the Substack and putting some investing ideas as well. So if you care for that, feel free to subscribe to the Substack channel as well. I'm going to pick up YouTube in a couple more weeks as I get a little bit more time. And then X, I post pretty regularly. So follow me there as well.
And the handle for the Substack as well is obviously at InvestK, as you see just below the picture there of Kaye. For me personally, I don't do much on Substack too much, but I'm posting a little bit more on YouTube now, which is exciting. A lot around kind of evergreen content for trading. So that's something you're into to kind of learn about psychology and kind of processes around trading. That's going to be right up your street. And of course, I post very, very frequently on X, all about trading insights and kind of engagement around, again, psychology and processes, etc. So yeah, no, stick around, add both of us on your agendas, and check us out. And obviously, massive thank you to Wolf again for us to use the platform, but you couldn't do it without you, of course, and it's powered this stream very, very nicely. Let's jump into the charts in just a second, but before we do that, I'll take that away. I will bring up this one here. So make sure you make sure you put your ticker requests in the comments below. We've had quite a few come in already. We've got about half an hour to cover any tickers that come through. So yeah, we'll probably need a few more just to fill out the ranks a little bit and obviously get as much as we can in terms of value. Right, I'm going to stop talking. I'm going to get the charts up, ready for us to have a look. It's going to be an interesting week for sure to chart, given what happened at the end of the week, isn't it?
Yeah. 100%. I think the first chart, the first ticker EMR, they are Emerson Electric. While you bring that up, I'll tell you what they do. So it's a technology and software company that provides various solutions in the US, Asia, Middle East, basically the entire world. It operates through multiple segments like final control measurement and analytical, discrete automation, safety and productivity control systems. So basically, they are in the electrical component and equipment industry. So the sector would be the industrial sector. And while you are doing that, I'll also give you a couple. So they are about a 79.75. So let's say $80 billion market cap with a short interest of 2.12%. And they're going to report earnings on 8/6, so next week. They have a 15 down revisions. Their EPS is 1.08 with an estimate revenue of 4.61 billion. That gives you a little bit context on the high level on what this company is.
So the earnings is literally on Wednesday. That's
Correct.
interesting.
Yep.
I've already pointed out the fact that obviously we've got this support resistance line from highs back in December of last year, and the 50 move average around that area, and the volume profile. It's still a bit more of a steeper drop, but this stock, there's not much movement in this stock, which could actually be of an advantage in this market, because you've got a lot of stocks that move very, very fast. You've got SoFi, Robinhood, Palantir, Neo. There's tons of them. There's kind of smaller cap names, of course. So if you're feeling a little bit emotional, kind of a bit apprehensive around kind of trading those kind of stocks, and maybe look at these sort of names that kind of move a bit slower. Of course, they have their good days and their bad days. You can see there's very big moves in these stocks as well. But yeah, just choose your stocks wisely, and maybe sometimes you don't even have to trade. I kind of went off on a bit of a psychological hit there. Any thoughts on the chart here, Kaye, while we're on this one?
No, I think from these names, if this is something that you are investing from a long term standpoint, I would definitely wait for the earnings to play out.
Yeah,
Because even looking at during the earnings week, their implied volatility on the options market is not that high, because there isn't much volume in the option side. So that means that this stock is not traded as often on the options market as maybe something else. So just keep that in mind. And their moves are generally about 4.5% plus minus during the earnings.
Interesting. So if that was a downside, perhaps that might come down to that line that I've been talking about, that 134, 135 sort of area.
Yeah.
I'll stick it on the watch list for sure. Whether I trade it or not is a different thing, but
and that's sitting
like
right, the line that you have drawn, the support level, that's sitting right at the 50-day SMA.
Exactly. Yeah.
Yeah.
EMR.
Okay. Yeah. Next one is BWXT, which is BWX Technologies. And they manufacture and sell nuclear components in the US, Canada, and internationally. They operate through two segments: government operations and commercial operations. So, aerospace and defense industry, and they are also an industrial stock. They are a $13 billion market cap. Short interest is 3.1%. Earnings is reporting 8/4. So Monday they are reporting post market, which is after market closes. They have 8 down revisions. $710 million is their revenue estimate, with 78 cents as the EPS prediction.
So this move is actually one of my favorite moves in terms of breakout trading. You can probably see why. Obviously, lots of resistance at this line at 144 kind of throughout the last couple of months. Broke out from it nicely, come back down, just retested that level with confluence. So you've got the volume profile here on the right. You've got 20 moving average here with the orange line, and of course that line I spoke about before. So that's 3 points of confluence. The only hesitancy that I have is obviously the earnings, as you mentioned, tomorrow. So perhaps I would wait for them to play out, see what happens with price action. It's going to be a bit of volatile 2 to 3 days after that as well. So probably let the dust settle. And if it comes around that kind of 144 and the fundamentals look good for the next couple of quarters, then it could be a potential play for another leg higher with a nice tight stop loss. As always, below the 20 moving average. So that's my thoughts around this stock and the chart. What the company does is very different. You say nuclear parts, is that right?
Yeah, nuclear, and they are basically aerospace in the industry standpoint. So similar to the Emerson Electric, they also move about 4.4%. So again, a slow moving stock. And from an earnings standpoint, they don't have much IV on the options market. Their volume is also pretty low compared to the names that we generally trade in options during earnings. So you have to be very careful when you are playing the earnings, because you may not get the move. However, these kind of stocks are also good in terms of maybe playing iron condors or stuff that it will stay in the range. But the problem is when the volume is low, sometimes fulfilling the order may take time, and especially with the expiration, soon, within a week or so, your orders might not get fulfilled. So generally, I stay away from slow moving stocks for earnings trade specifically.
Yeah, you need that liquidity, don't you?
Yeah.
Awesome. So I
Okay.
think that's a very interesting one. Thank you for bringing that one up, Czar Trader, on the screen here. We appreciate those two picks. I like to have new names, new charts I've never seen before, because it kind of opens up my horizons. I sometimes get, I don't know about you, but I sometimes get stuck on the same names,
Yeah,
the same 20,
absolutely.
30 tickers. I'm just like, okay, let's keep looking at these, keep looking at these. It's nice to get different names and different industries as well.
Next is Tempus AI, TEM.
Here we go. Oh, is that the 200 moving average? Right on it, just here. I've got lots of lines on this screen. Lots of.
Were you trading this before?
I have been trading this before. Yeah, I took it from, I think, this area, just kind of the most recent high of the breakout of the trend line, I think.
Okay, before
Was
you
it that
begin,
one?
I just have to give you a couple pointers.
Yeah,
For this particular stock, the options market overestimates Tempus AI stock's earnings move 100% of the time.
really.
Yeah. So the average implied move is about 15%, but the actual earnings move is about 10.6. So something on those lines. So the trade stock is what, 59? So about 10, like $6, give or take, plus minus.
So we've got a broadening wedge here, a broadening channel. I don't even know where to start with this chart. I probably wouldn't trade it even at the 200 moving average. I think it's probably just a bit too risky where it is now. I would like it to kind of break a trend line or something like that. 300 is
So
obviously not on there, but
so if you're looking to just another data point for you guys, so at 52 strike, you have 11,730 contracts open for Tempus AI, and the IV is at 102.87%. So you basically, if you're selling options, you're getting a pretty good premium, and if you're buying those calls, it's very expensive.
so would you be buying them?
No, I'm not
No.
trying to trade this one, but
Yeah.
so at 52, that's what the 11,000 contracts, and then at 62, there is 12,000 contracts for expiration next week, August 8th, of course.
So it's undecisive.
So if you think about but the problem with August 8th expiration is that you will not get enough time because the earnings is on Friday before market. So
Oh, really?
basically, your orders may or may not get fulfilled. So you might have to look for other, further expiration just to be on the safer side. But then that kind of defeats the purpose for the earnings IV, as the IV drops to about, I guess, 89% from 110.
That's crazy.
Yeah.
I think breaking out of this trend line would be the only thing that I'd be looking at. But it doesn't look like that's going to happen anytime soon. It's still within the broadening channel, as I mentioned before, and this kind of wedge that's kind of forming as well. Yeah, it's interesting. You could also draw a line here to come across
So are you
these lows.
bearish on this one from what we are seeing, or what's
Yeah, I am.
bearish?
Yeah. I think with the market the way it is, I think we can lose this 200 moving average pretty quickly and revisit this trend line, which is about 46, maybe given the days and the time, about 46. And then I'd be very interested because an entry there would actually kind of be ideal. So you've got the bottom of the trend line there. You keep a stop loss below this low, which is a 23% stop loss, which is probably not ideal. So I'll probably have to bring that one up. Again, I'd have to do some research into kind of how I play this, but that level does look interesting. But I definitely have to manage a bit better with 23% risk downwards. That's not ideal at all. It's one for the watch list, but definitely not one to actively trade for me, at least right now.
Yeah, especially because this is reporting earnings on Friday, it's going to be very tricky to get your orders fulfilled. So
Exactly.
keep that in the back of your pocket. Next is DG. I think that's Dollar General. Yep.
Yeah.
They report earnings 8/28, so you have the whole month.
So we've obviously covered this one a little bit before because I do have a line already on the screen at 122 for the stock, which looks like a gap fill.
It is a gap fill, actually.
Yeah. I've also got lots of resistance around this level as well, 115. I don't. Yeah. Do you trade these sorts of stocks, kind of
No.
Dollar Tree and Dollar General and all that kind of stuff? No, I just feel them. I mean,
Because their IV is so low that the premium is not worth it.
no, and also the company as a whole. I mean, surely they can't be doing that well. I mean, maybe the economy the way it is, people are looking for cheaper products, but let's have a look. That's
So,
not too bad.
but year to date, the company has done very well, right? If you had the stock in the start of the year, you're up 43% on it.
Yeah, true. Yeah. I mean,
So
this
I
is the
see
weekly
why
chart.
this could be a name that somebody brought it up, right? 6 months, you're up 50%, 51%.
This is the weekly chart. I've just seen something I quite like. There's a low here where the stock reacted really nicely, as you can see there. I mean, that return is similar to what you just said from the year to date, 51%.
Mhm.
And we've got the weekly 20 moving average and the 50 moving average, and obviously that the thing I just mentioned before. The only thing I would be watch out for is no volume at this sort of area. So you've got 3 points of confidence for that trade. Obviously, you'd be looking at the 200 moving average down on weekly, which, so my voice is going slightly, which is coming up to about 35% move. But then there's better names in the market that I like to trade. But that's my kind of perspective on this stock.
Also, I think especially with the, with the tariffs, right? These kind of names do get impacted a lot more. So that is something to also that would be, in your consideration if you are trading this, at least from a swing trading standpoint. Not if you're doing day trading, then that's a different situation. But if you're swing trading Dollar General, that you have to keep in mind as well.
Yeah, it's linked a lot to that, isn't it?
Okay,
Right.
next up is Tesla.
Tesla. I've listened to this one for
We
a
actually
while.
had 2 requests for Tesla, so that's good. We are covering Tesla.
I think it was the same person, wasn't it?
Let me see. I think we had CJ requesting Tesla, and we had CJ was requesting Tesla. You're right, same person.
Okay, so I mean, I've done
Yeah.
research earlier on, I think yesterday. Just this, again, this wedge is all I've got really. It's going to break out at some point, whether it be to the downside or to the upside. I will probably play it, to be honest, to the downside or the upside, because when it will break hard. And I will just collect an easy 10% on it. I'm not going to go anything further than that. I'm just going to
Well, no. So I already have a trade in place for exactly the same reason for the wedge to break, whether to the upside or the downside. I'm hoping it breaks to the upside so I can make money. If not, I'll exit the trade. But my trade expires 8/22.
right. Awesome. So that's a couple of weeks then. 3 weeks. 3 weeks.
Exactly 3 weeks. So basically, this is a crucial week for me to see that this plays out. Now, if you remember, when I drew the line, it was a little bit different from how you have drawn the line. So in my chart, it's already breaking down to the downside in my wedge, but it did not reach the apex of the wedge. So there's a good opportunity that it might actually claw it back to the wedge and continue the trend. But I might have to, see this week. This week I'll have to make a call whether I want to stick with it or not.
Yeah, I mean, this week is definitely looking like a key week for this, the price action for going forward.
Exactly, because in your chart, this is the week for the wedge to play out. This is the exactly, yeah.
And on the daily, we're looking at the 200 moving average as well, sitting
Exactly.
right
So
there.
if it doesn't work on 200-day, I have to probably pull the plug.
So
All right.
let's talk about a couple of price targets while we're here for Tesla, because I think a few people might be looking for that, kind of insight perhaps. So to the upside, what's your kind of target? And I'll talk about downside.
My initial target was 367. That I was hoping for the upside breakout to take out the equal highs from the February, which hasn't happened yet. So that would be my near-term target for Tesla. Honestly, anything between that's great. But that was the hope that it can take out the equal highs from the Feb.
Yeah, and I think for me, for the downside, then it'd be about 260, because you've got this price action as resistance here, and of course the kind of volume as well on the right side. So we've got a couple of price targets there to the upside and the downside for Tesla. So definitely one to watch going for the week ahead. Whether it makes that move either way or starts making that move is another thing. We're obviously just a couple of guys looking at charts. That's obviously not financial advice. Yeah. So what's next? Okay.
Next is NSVT. Let me see. And then somebody asked for NVTS. I don't know if the same ticker or different ticker. NSVT. So there's this is not NSVT. So then try NVTS.
The BTS. Navitas Semiconductor Corporation. Oh, this is doing well. It's a very small stock. It's not quite a penny stock, but it was about 2 months ago.
Short interest is 25%.
Ooh, that's probably why you're seeing increased volume. Nothing really happened until mid-May. I wonder why that is.
This stock in its glory days in 2021 was trading at $22.
But there's a massive spike of spike of volume here. You can't see it because it's not on the screen. There you go. Just after mid-May, you've got huge volume bars increasing. There's literally no volume before this. So something's obviously happened at this point. I don't have the news reports or anything like that on here. But generally, it looks like we're kind of going an upwards channel. I'll draw that out for the people to see. We've got, let's do that.
They did get a downgrade from Deutsche Bank on June 17th. So that's also pretty old news. There isn't much going on over here.
Perhaps the fundamentals are looking pretty good then, perhaps. So until, I don't know, I wouldn't be trading this, that's for sure. Maybe if it comes down to the 50-moving average, but even still, that's a break of the channel. So I'd just be keeping an eye on this more than anything. I'd have to do more research into kind of what it does more specifically, but okay, there you go. Teddy's just brought up the answer to my question earlier, which is why the volume increase, and that is NVIDIA invested in them, which would increase volume regardless of what company you are. A bit like SoundHound. I mean, SoundHound had that kind of affiliation with them and that kind of link with NVIDIA, and they've obviously subsequently had lots of volume since. So
do you like trading names like that that depend on the larger player investing in them?
I definitely think it's lucrative. Yeah. And sometimes those stocks play more towards technicals than you think. Now, I know that I look at the charts and stuff are probably more so than you do. I know obviously you do look at a lot of charts, but I religiously look at them and probably play too much on the chart, more on fundamentals, etc. But I'm a bit more of a shorter term trader than yourself, a bit more longer term. But yeah, I think, what was the original question?
Your question was that do you invest in? Sorry, not invest. Do you trade?
Yeah,
that dependent on the bigger player to invest.
The answer is yes, yeah, for sure, because the volume is there, the interest is there, and technicals kind of line up as I mentioned. So yeah, for sure. I mean, I trade soon, not regularly, but it's on my watch list, and when I see it go down to a certain level, I actually lost money recently on SoundHound. Because it broke the trend line and obviously subsequently hit my stop loss. But that's trading, you win some, you lose some. Luckily, it obviously wasn't a huge point in my portfolio because that's what you do with those stocks.
You have a new comment about SoundHound. If you want to bring it up.
Okay, so I bought more SoundHound this week. I'm holding long term. So if you're holding long term, then that's completely up to you. And I do believe that they're quite a good company. They've got quite interesting products. It's AI involved with sound. It's kind of self-explanatory.
Okay.
Yes, very interesting.
Let's move to next one. Is ASML. That's in the wheelhouse. So
that's your stock, isn't it?
Yeah. So I would say that on the SML, I'm not trading ASML. I'm building this for the long-term portfolio. So it's the idea is that right now this has breached the 700 mark, and on the it's below its 200-day SMA. It is below its 300-day SMA, and below basically all other averages. And if you do not have a position, it's a good idea to maybe start building it if you're interested. Again, not financial advice. I am building continuously on every dip, basically. Now there are other folks on FinTwit that they think that, hey, ASML is not worth the investment, but that's up to you to make that determination. From my perspective, from all the research I have at least done, being being such a high mode company, I don't see why I would not invest in ASML. But again, it's an investing decision you will have to come up with.
It's also worth saying to the viewers as well that it's a big part of a lot of semiconductor ETFs. Not a huge part, but it's a substantial, like kind of 4 or 5% situation, whereas Nvidia is more kind of 15-20% of those kind of ETFs. So it's definitely part of that. So if you don't really want to have complete exposure into ASML, which is currently my situation, although looking at this chart looks quite interesting. Yeah, it's another way to do it, kind of ETFs. But yeah, looking at the chart from my perspective, I think this is the weekly chart, and it's quite interesting because it's sat right at the 200 moving average on the weekly. And it has reacted around this sort of area in the past, back of October of 2023, which seems like quite a long ago now, and obviously November and kind of the turn of the year this year as well. The other thing here is you mentioned the 300 on the daily chart, but I've got the 300 here on the weekly chart.
Oh
If
wow.
we were to continue coming down, this would definitely be a really interesting point of for an entry, at least for a longer term portfolio.
Yeah.
622 that would be.
Yeah.
How does that look on the daily? Does that look too nasty on the daily?
622. Ooh, that looks pretty bad though. That
Yeah.
will take you down all the way to April during the Liberation Day. So that would be right around when I start. That would be right around my cost basis, actually.
There you go. So that'd be an even more enticing point to
Yeah,
add
I
potentially.
mean, I don't mind adding, at my cost basis.
Yeah, of course. And just the last point we'll make while we're on this. I mean, what are we on now? 51, and we've got a few tickers left. So just a quick observation of potentially a very weird pattern, but a head and shoulders. So you've obviously got the price action there, come back down for the head, come back up for the other shoulder down here, and then perhaps obviously move back up there. So another thing to be aware of, if we do get a positive reaction, perhaps taking some profits around this 850 mark would be a point of contact. Just thought I'd throw that in there for people to have a look at, to possibly draw on their charts and analyze themselves. Next.
The next is Hood.
They had a rough day on Friday, didn't they?
Well, if you think about it, like, I mean, with the run up they had, it is good that they're having a pullback, right? That's a healthy pullback. Question is, will they have a pullback all the way to the 80s, 90s, or below that? We don't know, but that was a good pullback though.
Well, we've said this with Palantir back in the day, didn't we? We said, waiting for a pullback. Let's have a well, not waiting, but we're observing for a pullback and see where it goes, and just keeps powering higher. The one thing I've got on my chart is obviously this trend line, which I've obviously had quite some time by looks of it. And it's just literally touched out on Friday. So I'd be looking for a break of that and actually potentially shorting it down to kind of one of these lines, 85 or 67. But that's very hard to do that in terms of this market and how well performing Hood is.
Okay.
Yeah.
Next up is Melly.
Melly, yes.
And I have one request, UNH, before we end. So, and I'm just trying to add everything else. Can be.
Right. Ricardo Libre. This is South African Amazon, right?
South
American.
Yeah, most likely, yeah.
So immediately, I think around this yellow line that I've obviously clearly drawn before, you could actually change that and come across the highs like that. That might be better just because you've got more contact points and there's a support there. So we're looking at around 2250. That's my immediate observation. What are you looking at here? Anything?
I mean, if it breaks from that, then you're looking at there is really no volume shelf, man, to the downside until you hit that level. That's going to be a sharp drop. Yeah,
that's a good point. Yeah, volume shelf. Even down here,
exactly.
2,100.
Yep. Okay. Next is now ServiceNow.
ServiceNow.
So I like the company ServiceNow. It's like Salesforce, basically building out everything. It's like you get the software and you pretty much get a lot more modules to do other things as well. Yeah, it's Very interesting. Let me see if they're reporting earnings. They
It's not
report.
looking good.
Yeah, it's not. Yeah, see, the most of the problems with the SaaS companies is it's pretty straightforward, right? If you're talking about AI, which means that they are building AI features within their software, they have to be able to sell that feature to the customer, which means the customer needs to pay for that software. Give you an example, right? We don't have much time, so I'm going to give a quick example. Microsoft Copilot. There are still companies that are not going to pay for the Copilot seat because it's not generating enough value. Now, within the company, you will have departments that may pay for it to do specific tasks, but across the board, if you have 5,000 employees, all 5,000 employees are not getting a Copilot full license because that's a cost added on top of their paying Microsoft. So that's the problem. Unless they can really show that this is such a great feature and this is going to change the ROI for if you invest in it. That's the challenge most of these companies are running into in the SaaS space.
Yeah, it's a tough time for them. I think this is the weekly chart we've got here, coming down, crossing the MACD to the downside, especially around this kind of midpoint as well, as you see on the I don't even histogram, what you want to call it, and obviously breaking the 20 moving average and the 50 moving average. So I've got this line here at 778. So there could be a potential short opportunity if you against these sorts of stocks. You could have
Yeah.
like another trend line there as well as breaking that. So yeah, I'd be very cautious if you're looking for upside on ServiceNow. But yeah, that's my
Also,
take on
yeah,
that.
it's a pretty expensive stock. If you sell options, like it's a $90,000, you have to park
Yeah,
to get 100 stocks. But anyways, moving on to the next one, fast PSTG. Not sure what it does though.
pure storage. I'm guessing there's something to do with storage.
Most likely, yeah.
I don't mind it though. The MACD is actually coming up nicely on the weekly, but that's not normally where I start.
But that was a pretty big drop on Friday. I wonder, if it can.
It's at the 200, at the 300, just below that. Lots of volume on the right. Yeah, it's breaking the trend line now, I think. Yeah, I'd watch out for that. I'd stay away from this for now. One, because I don't really know what the company does. I do like to kind of roughly know what they do before I jump into trades. But it looks like it just basically gap filled and dropped. Or not even. So that's the gap fill there at 62. So almost gap filled and then dropped. Imagine if you're in that trade and you're waiting for the gap fill and then all of a sudden it just does that. Well, that's a killer.
It filled the gap. It created another gap. Okay, moving on to the next one. IoT.
Internet of Things, isn't it? Samsara. I don't know what this one does. What's this one do?
While you look it up, I'll check it.
We again not looking good, but these wow.
It's an IT sector application software.
It does, yeah, it doesn't look good. It's below one of my averages, below this volume shelf. This is a very rough trend line, I must admit, but still it's breaking that trend line. So we're looking at kind of lower low. We could draw one there perhaps. Let's have a look at this one. So if I would short it from here to here in this current market. Do you trade these sorts of names, or not so much these IT names? You're a bit more towards SaaS, aren't you?
Yeah.
Yeah, I wouldn't be optimistic for this stock, that's for sure. But there's definitely a trade in there to the downside from my initial look, and you've got the trend line hitting the upside as well. So there is a chance it pulls back upwards tomorrow, regains this trend line, and then perhaps makes a move above that. But there's a lot of work to do for that to happen.
And there's
I would actually put that on my watch list, though. Sorry, Kaye.
But there is a lot of resistance, especially on all the averages.
Yeah, no, that's definitely. But if it does get through that on one big volume candle potentially, which is very unlikely at this moment in time, but it could happen, then there is room for a potential trade to the upside. But for now, I like it more towards the downside. Right,
Okay, so we have 3 tickers left. Kenvue, KVUE, DLO, and then last one is UNH, and then we wrap it up.
What's the ticker for Kenji?
KVUE.
Lovely, thank you.
Yeah, so this was a spin-off from Johnson and Johnson on their product. I remember because I used to have Johnson and Johnson, and when I got some shares of Kenvue, I thought that this company will eventually. I mean, this is stagnant basically if you think about it.
Yeah, it's been sideways trading for
Crazy.
middle
Yeah,
of last year, pretty much.
yeah.
I mean, it's kind of in a massive wedge though. Since it
These are
started
not
trading.
these stocks are not meant for trading. I'll tell you that.
No, but you can trade them. You can. I don't trade them, but people do find their way with these stocks. But yeah, look at that massive kind of wedge forming since the inception of this stock.
Yeah, it's
So there is a potential here of adding at 21, but then even if you go to the upside, it's only 24. So there's just
don't
not
forget
much
there's a gap up, right, between 18 and going to 19. That's a gap on the daily. So guess what?
Where's that? Oh, here, yeah.
Yeah, see that?
So you're looking at that gap, Phil.
Yeah. I mean, if I am interested in Kenvue, I would look at that gap, honestly. Especially with the trend changing to making lower highs. I wouldn't be surprised that it fills the gap around somewhere like maybe September, October, November, right?
But you're looking at that gap more from an investing standpoint, not
Correct.
trading standpoint. Yeah. So just clarifying that for the viewers there. Okay, what's next?
Next is last one is DLO, and then we wrap up with UNH.
Thank you, obviously, once again for sticking in the tickers. We massively appreciate it. Obviously, keep coming back every week at 1 p.m. Eastern to keep bringing in new ideas, and obviously receiving ideas from not only us but from other people as well who bring in their tickers. DLO, obviously, we've obviously covered this very recently. It's just basically gone down since, and that's what happens with trend lines. You break them. Let's zoom in a bit so we can see kind of my thesis there. What we've done is we've broken the trend line nice and cleanly. We come back up and retested it, and subsequently made a move down. So if you're in that short, well done. If you're looking for an add for the future, then perhaps there might be a gap below. There's this very, very small gap there. So perhaps 894 could be of interest for people. And that's only 10%. Kaye has disappeared. I did lose you, yes. So it's just me on the stream at the moment now. I think he might be able to just join naturally back into the stream. Where am I? Technical difficulties. Awesome. Right. So this is obviously DLO, and we were going to cover UNH, but that was more of a point from Kaye to have a look at UNH. I'm currently reading messages and his internet's down. So what I'm going to do is close this stream because we were at the end anyway. This was kind of where we were at. We'll touch on UNH very loosely here while we're here, because he did say he wants to cover it. I think he was more saying about how it's looking like it's just going to continue downwards, and there's lots of people kind of bag holding this now. I'm not currently in this, but the further it goes down, it does look like it could be of interest. Put in the comments where if you've got your cost basis for UNH, or if you're struggling in the position and you're looking for a way out, because once you're in these stocks, it's very hard to kind of justify your position in them. Right, there's obviously a very obvious bottom there at $200. It's a psychological level as well. So yeah, 200 definitely be a source of interest for me. Going back even further, looking to kind of 2018 kind of charts, yeah, $200 for sure, I think is definitely an interesting point for the stock going forward. Thank you, obviously, for 3,000 viewers. I mean, that's exceptional. In the middle of summer with the red market the way it is, I think that's a pretty good going for how we're doing at the moment. Thank you to Wolf as well for actually the platform. We really, really appreciate it. We couldn't do it without you. I'm sure Kaye would say a wonderful goodbye at this point, so I had to say goodbye for him. We do this every week at 1 p.m. Eastern time, every Sunday, of course, which is obviously the day that is today. Yeah, thank you everyone who obviously put their audience requests. Stay safe out there. It's a very frothy market, and we are experiencing a little bit of a pullback. He's come back for a goodbye. He's come back for a goodbye.
Yes, I came back because my network is down for a reason. My software is getting updated, so it just shut down for automatically. But okay,
Technical difficulties. It happens.
technical
It happens.
difficulties. Exactly.
I was just saying to the viewers, we are actually just saying goodbye. We did touch on UNH briefly. Do you have if I brought it up now, do you want to talk to it or not so much?
Yeah, absolutely.
Okay, I'll bring it up just quickly now for the viewers. There we go.
So, initially when we saw that big gap down, and we were talking about that, is 300 a good level for us to add UNH on? After it consolidated at those levels around the 291 to $310, I think with the recent, drop down, I wouldn't be surprised if we actually go and see the $200 level. And I wanted to keep talk about this particular trade is because I actually deliberately took a loss on UNH, because the way things are shaping up for UNH, we could see those lows of 200, and I did not want to get caught holding shares of UNH at 250 or 260s, where we could get to 200. So that's my only input on the UNH as of right now. Things are not looking great for this company at the current point in time, but this presents an asymmetrical bet on the swing trade.
Yeah, so you kind of echoing what I said as well, kind of that 200 level from a technical point of view, as well as a fundamental and kind of psychological point of view for UNH. As it's kind of a very interesting point for the stock, and as you say, presents an asymmetrical bet potential. I'm sure we'll bring this up probably next week, maybe cover it in a bit more detail, or maybe the week after, of course. But yeah, we'll end the stream there. It's been a fun week. We've gone for an hour and 6 minutes. We did already look at that, Nayan, so you might have to rewind about 5 minutes for the Kenvue stock coverage. We did have a few technical difficulties at the end there, but we got through them. It was fine. I just kept talking, as I do. Anything you want to say? I kind of covered most of the outro, so if you want to finish us off, and then we'll go into next week.
No, this was great. Sorry about the technical difficulties. These things happen all over time, but I appreciate everybody sticking here and giving us a lot of tickers to look into it. Some great ideas, and hey, we loved it. Stay safe if you're going to trade earnings. Stay safe for the next week, and we'll see you guys next week here.
Yeah, take care, everyone. Have a safe week, and we'll see you.